The Chinese economy is in a state of crisis. There has been a slowdown in growth, youth unemployment is at a record high, the property market is in freefall, and businesses are having trouble with their supply chains again and again. The world's second-largest economy is feeling the pinch from severe drought, and its massive real estate sector is reeling from the effects of taking on too much debt. But the issue is made even worse by Beijing's inflexible zero-COVID policy, which shows no sign of changing. So, what happens next? A global recession or an economic recovery? Let's break it down in today's video. Hello, and welcome to our channel. In today's video, we're going to look at the key reasons why China's economy is weakening and the road to recovery ahead. Make sure to stick around till the end of this video, where we will explain how China's economic upset is impacting other world economies, especially the US and Europe. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video. China's economy is slowing down because it is getting used to a tough strategy called zero-COVID, and because global demand is falling. The official growth figures for the July-September quarter are dismal, and a worldwide economic downturn would be more likely if the world's second-largest economy contracted during that time. Although officials in Beijing have downplayed the importance of meeting the aim, a growth rate of 5.5% per year is currently beyond Beijing's reach. China's economy barely grew in the April-June quarter, avoiding contraction by a hair. Some economists do not see any expansion this year. While it may not be experiencing the same levels of inflation as the United States and the United Kingdom, China nevertheless has challenges. The once proud status as the world's factory has been tarnished by a rapid decline in demand at home and abroad. In addition, the expansion is being stifled by the trade war that has broken out between China and other major countries. Like the United States, the yuan's decline against the dollar has made this the worst year for the Chinese currency in decades. Investors are unnerved by a depreciating currency, which increases market volatility. Also, it makes it harder for the central bank to stimulate the economy by printing more money. Now that President Xi Jinping has achieved an extraordinary third term at the Communist Party Congress, the stakes could be higher. So, what exactly has gone wrong? Let's take a look at all the reasons one by one. 1. Zero-COVID is wreaking havoc. Economic activity across sectors has been negatively affected by the COVID outbreaks in various cities, including major manufacturing centers like Shenzhen and Tianjin. Major services are feeling the pinch as consumers cut back on necessities like food and drink, shopping, and vacationing. According to the National Bureau of Statistics, manufacturing showed signs of improvement in September. One possible explanation for the upturn is increased government spending on infrastructure. Nonetheless, this increase occurred after 2 months of stagnant manufacturing. Moreover, it has prompted speculation because a separate poll found that factory activity declined in September due to the impact of decreased demand on manufacturing output, new order placements, and job creation. The rising cost of borrowing money, rising prices, and the ongoing conflict in Ukraine have all contributed to a decrease in demand in major economies like the United States. The Chinese President Xi is in danger from zero-COVID. While most economists agree Beijing could do more to stimulate the economy, doing so would serve little purpose until the era of zero-COVID ends. Louis Quids, chief Asian economist at S&P Global Ratings, put it this way: there is not much purpose in injecting money into our economy if businesses cannot develop or people cannot spend the money. 2. Beijing isn't doing enough. Beijing has taken action, announcing in August a plan to invest 1 trillion yuan, $203 billion, PS 180 men, to support small enterprises, infrastructure, and real estate. To achieve growth goals and generate new employment, however, government authorities may do much more to stimulate expenditure. More money should be spent on infrastructure, and home buyers, developers, and municipalities should have easier access to credit and tax advantages. When compared to responses witnessed during prior periods of economic downturn, the current government response to the weakening economy has been rather muted. 3. China's property market is in crisis. No one can deny that slowing growth is the result of low real estate activity and pessimistic home market outlook. As much as a third of China's GDP is based on real estate and related businesses, this has been a major blow to GDP. When people lose faith in the housing market, they worry about the economy as a whole, as Mr. Quids put it. Uncertainty as to whether or not their homes would ever be finished has some buyers hesitating to make mortgage payments. There has been a decline in the demand for new housing, which has led to a lesser requirement for the import of commodities used in building. Home prices in dozens of Chinese cities have fallen by more than 20% this year, despite Beijing's best attempts to stabilize the market. Analysts say authorities may need to do more to restore trust in the real estate market, which has been hit hard by the stress on property developers. 4. Climate change is making matters worse in China. The effects of extreme weather are becoming more long-lasting in the business world. The province of Sichuan in the southwest and the city of Chongqing in the central belt had a severe heatwave and subsequent drought in the month of August. The increased need for air conditioning caused an overload of the electricity grid in a region where hydropower is almost the only source of electricity. Foxconn, which makes the iPhone, and Tesla, which makes electric cars, both had to reduce factory hours or close. In August, the Chinese Statistics Office reported that, compared to the first 7 months of 2022, profits in the iron and steel industry were down by more than 80%. In the end, Beijing provided tens of billions of dollars to save the day for energy firms and farmers. 5. China's tech titans are losing investors. China's tech giants are feeling the effects of a regulatory crackdown that has been going on for 2 years now. Tencent and Alibaba both had a decline in sales for the first time in the most recent quarter, with Tencent seeing a decrease of 50% in earnings and Alibaba seeing a loss in net income of 50%. 1 in 5 people between the ages of 16 and 24 is unemployed, and the loss of employment for tens of thousands of young people has only exacerbated the employment crisis. The country's growth and productivity may suffer as a result. Some of China's most successful private enterprises have come under increasing scrutiny as Mr. Xi's hold on power increases, and investors can feel the change in Beijing. Foreign investors are pulling money out of the market as state-owned enterprises look to be gaining favor. SoftBank of Japan withdrew a large sum of money from Alibaba, and Berkshire Hathaway is selling its share in BYD, an electric vehicle manufacturer, to raise capital. More than $7 billion in investments were pulled from Tencent just in the second part of this year. Additionally, the United States is increasing pressure on Chinese firms trading on the New York Stock Exchange. According to a recent report by S&P Global Ratings, certain investment decisions are being postponed, and some overseas corporations are attempting to increase production in other countries. The international community is getting used to the idea that Beijing isn't quite as open for business as it once was, but Mr. Xi is endangering the economic success that has propelled China in recent decades. It's worth noting that a sizable number of international investors in China have voiced their displeasure with the country's tightened controls. The company is probably going to seek for alternatives, even if a major change in operations is not probable in the near future. The rest of the region, except China, has benefited from loosening limits on COVID-19. In the words of the ADB report, increased movement in much of the region is underpinning lessening pandemic restrictions, greater immunization, falling COVID-19 fatality rates, and the less severe health impact of the Omicron variety. ASEAN and South Asia benefit from China's slowdown. Particularly relevant is the experience of the members of the Association of Southeast Asian Nations, ASEAN, whose policies toward COVID have differed significantly from China's. The liberalization of borders has boosted the tourism industry in the region, especially in Malaysia and Thailand. Due to the importance of tourism to these countries' economy, this is crucial information. It's worth mentioning here that many businesses have left China in the wake of COVID-19, with Vietnam being a popular choice thanks to its convenient location and thriving economy. Some companies have also moved to other ASEAN nations as well as India. The stock markets of these nations have also been performing admirably. JP Morgan and Goldman Sachs analysts chose Indonesia, Vietnam, and Singapore as their top 3 markets for 2022 in April, and Credit Suisse analysts chose Thailand as their top market for the region in May. In conclusion, China has been a major factor in the expansion of economies across Asia and the world, but its economic difficulties are not expected to vanish anytime soon. However, Xi Jinping's economic policies have also contributed to the slowdown. Countries in the Association of Southeast Asian Nations, ASEAN, such as Vietnam and Indonesia, and those in South Asia, such as India and Bangladesh, could benefit the most from China's COVID-19 policies and its eventual slowdown, thanks to their investor-friendly policies that could entice more companies to relocate there. So how long do you think will it take for China to recover from this economic downturn? Tell us in the comments. Also, if you like this video, then make sure to watch this next video on our channel. Thanks for watching.